Everyone wants to beat the market. You know, as investors, it's one of our greatest competitors, and it's one of the benchmarks that we use to evaluate how successful we are at picking stocks. However, accomplishing this is extremely difficult, and something like only 10% of full-time professional investors are actually able to make it happen. Having said that, if you would have invested in the 5 stocks we're talking about today, you would have absolutely crushed the market. So without further ado, let's get into it. All right, what is going on, my friends? Ryan Williams here, back with another one. In case you're new to the channel, welcome aboard. Here we talk about how to create passive income and reach financial freedom by investing in dividend stocks. And the 5 we are talking about today are just absolute powerhouses. Over the last 5 years, these stocks have delivered astounding returns for shareholders. And if you've owned any of these in that period of time, well, I'm jealous. Let's just leave it at that. Not only have these stocks wildly outperformed all 3 major indices, you know, the NASDAQ, the Dow Jones, and the S&P 500, but each of these companies looks to be in great shape to continue delivering returns for shareholders into the future. Now, the first stock we're going to be talking about today is Lowe's, ticker symbol LOW, which is one of the country's largest home improvement retail stores. It's between Lowe's and Home Depot, and out of the 2, Lowe's is the only one that I have in my portfolio. I just started buying into this company maybe a couple months ago now, and there's a lot to love about Lowe's, but today we are going to be honing in on its share price performance. In the last 5 years, Lowe's has an overall return of 143.93%, which when you compare that to the S&P 500 right here, the Dow Jones index, and the NASDAQ is considerably higher. The S&P in the last 5 years has returned about 84.5%, the Dow Jones about 55%, and then the NASDAQ 128%, which is almost as good. And if we look at this share price chart right here, we can see that the NASDAQ and Lowe's have kind of been, you know, going back and forth, outperforming each other here and there across time. But overall, Lowe's has reigned supreme. Moving on to the second stock of the day, we're going to be talking about Costco, ticker symbol COST, home of the $1.50 hot dog. And another fun fact about Costco actually is that the infamous pie in the movie American Pie was from Costco. I thought that was pretty cool. I learned that when I was researching for this video. As you can see here, guys, Costco in the last 5 years has generated a return just above Lowe's with a 170.23% return. And compare that to the other 3 indices, guys, it is doing exceptionally better. I mean, it's doing over double the return of the S&P 500. It's doing over 3 times the return of the Dow Jones index, and it is beating the NASDAQ by, what is that, about 50% almost? And we can see here that prior to 2021, it was at least outperforming the S&P and the Dow Jones index and then trading right along with the NASDAQ. But starting in 2021, after this dip right here, it really starts to take off and catch up to the NASDAQ, where it finally outperformed here at the end of 2021. And since then, guys, it's doing much better than the NASDAQ and the other 2 indices as well. So Costco is just one of those companies that absolutely dominates the market. And if you're not invested in it, likely it's sitting on your watch list. And if you're like me, then you're waiting for the right opportunity to pull the trigger on this stock. And we can see it's kind of getting there. Okay, going over to the summary page real quick, taking a deeper look at this company's share price performance. In the last 6 months, it's down 9%. Year to date, it's down nearly 16%. So it is getting more affordable. And I think we just have to deploy a little bit more patience, and we might find a nice buying opportunity. We'll see what happens. Now, moving on to the third stock of the day, guys, we have Microsoft, ticker symbol MSFT, which is the 3rd largest company in the world with a $2.04 trillion market cap. That's just an unfathomable amount of money. And Microsoft is also the world's largest software company, which is crazy. And their share price returns have not been too shabby either. In the last 5 years, as you can see, Microsoft is up a whopping 276.31%, absolutely blowing Costco out of the water by an extra 100%. And it's generated over 3 times the return of the S&P 500, okay, 5 times the return of the Dow Jones index, and over twice the return of the NASDAQ. And look at how far it pulls away from the indices here on this share price chart. It's just insane. And I'll tell you guys what, don't share this with too many people, but I'm working on a little time travel thing here in my spare time. And if and when that works out, I'm going to go back in time, at least, 5 years or so, pick up as many shares of Microsoft as I can and just sip a couple margaritas and wait. Because apparently that's all you need to do really to be successful as an investor. You just got to buy these great companies like Microsoft or Costco or Lowe's and just sit on them and wait and see what happens. They're awesome companies, and that might be a trend that you've noticed so far with the 3 companies we've mentioned today. They're all household names, okay? Very recognizable companies. They're some of the best in the world, which, I guess that's no surprise that the stocks are some of the best performing ones on the market, right? Now, moving on to the 4th stock of the day, this is one that needs no introduction. That is Apple, ticker symbol AAPL, which is the world's largest company with a market cap coming in at $2.41 trillion. And having said that, it's probably no surprise to many of you out there that Apple has made the list for today's video. It's the newest addition to my watch list, and just like with Costco, it's one that I'm just waiting for the right time to buy. And as far as Apple's share price performance over the last 5 years, it's generated a return of 273.79%, which is really right in line with Microsoft. Apple and Microsoft, as far as share price returns over the last 5 years, are, very close, and it kind of goes back and forth between which one has performed better. But both great additions to any long-term investor's portfolio, and I'm sure many of you watching have at least one, if not both, of these companies. And having said that, leave a comment below. Let me know. Do you have Apple? Do you have Microsoft? Do you have both? Where are you at with both of these companies? Let me know. All right, guys, now moving on to the 5th and final stock of the day. This is NVDA, ticker symbol NVDA. And out of all the companies we've talked about so far today, this is the one that I feel like you maybe have not heard of, or at least would be the least familiar with, which is ironic because out of all the other companies, this one is the best performing stock by far, which we'll talk about in just a moment. But for those of you who have never heard of NVIDIA, they're big in the gaming industry, and they make graphics cards, laptops, other hardware, and they have their hands in artificial intelligence and cloud computing. Basically, they have their hands in a ton of different things, guys. But getting into their share price performance, as you can see, they have generated a return of 421.37% in the last 5 years. And I take back my earlier statement. If I get this time travel thing worked out, I'm gonna go back in time and buy NVIDIA. This return is 5 times what you would have gotten from investing in the S&P 500, 8 times the return that you'd get from investing in the Dow Jones Index, and somewhere between 3 and 4 times the return you'd get from investing in the NASDAQ Index over the last 5 years. It's not even funny how much NVIDIA has outperformed not only all 3 major stock indices, but these other companies that we've talked about as well. Going back to Apple, NVIDIA has like a 150% advantage over Apple, and the same is true with Microsoft, and has farther outperformed the other 2 stocks, Costco and Lowe's. And having said all of this, guys, now what I want to do is move on and show you a little sample portfolio containing these 5 companies and show you what your returns would have looked like if you were to have invested in these 5 years ago and just kept investing until today. So to do this, we are going to run a little back test using the back test portfolio tool on portfoliovisualizer.com, which is very handy and it's free to use. You guys, I'd highly recommend you check it out when doing stock research. But in this hypothetical example, guys, we would have started investing at the beginning of 2016 all the way until today in 2022, year to date, everything. And here our initial contribution would be $1,000. And then from there, we will contribute an extra $100 every single month into this portfolio, which is spread out, evenly across the 5 stocks. So going down here, we can see Lowe's, Costco, Microsoft, Apple, NVIDIA, all 20% of the portfolio. Now, scrolling down, taking a look at the returns, guys, if you would have invested $1,000 into this portfolio 5 years ago and contributed an extra $100 every single month, your initial $1,000 would have turned into $34,595, which is quite the return, if I do say so myself. And this is over twice the return that you would have gotten from investing in just the S&P 500. So you would have done really, really well. Look how much it pulls away and is above the S&P 500 right here. The crazy thing about all of this, guys, is these companies that we've talked about today are not like hidden gem companies. These are household names: Lowe's, Costco, Apple, Microsoft, NVIDIA's maybe not, but still, this just goes to show the potential of what you can make when you invest in high quality companies and just let time and compound interest do its thing. And now with that behind us, guys, let's move on and get into the weekly portfolio update. And to do that, we're gonna head back over to the screen. All right, so within my portfolio, I guess there's some good news and some not so great news. I mean, starting off, the market value of this portfolio right now is $37,479.70, which is just a hair lower than we were this time last week, we were sitting at $37,608.87. And it looks like the difference here was made today on Friday when I'm recording this video. Just today, I'm down, almost $300 for the day. Now, that's the bad news, guys. The good news is we've seen a really big jump in annual dividend income. So right now, my annual dividend income is $1,651.99, which is almost a $10 jump compared to this time last week. And part of that was from dividend reinvestments from my weekly contributions, which I'll tell you what I bought in just a moment. But a big reason for this jump, guys, is because I actually sold out of one of the positions in my portfolio. And in this video, I'm not going to reveal which stock I sold just yet or why I sold it. You're going to have to stay tuned until tomorrow. I'll be talking all about it in tomorrow's live stream. So make sure to be there, guys. It's going to be taking place tomorrow at 5 p.m. Pacific time. But anyway, guys, the combination of all of these things really helped me boost my dividend income for the week. Now, as far as what I purchased, I did kind of the usual. I invested $150 total. I put half of that into Lowe's and picked up 0.39 shares of Lowe's. And then I contributed the other half to Starbucks and got just under 1 share of Starbucks. Now, as far as my best and worst performing stocks for the week, it looks like Starbucks did really well, up 3.5% for the week. AWR did pretty decent as well, up 2.3%. And then EPD, ORCC, Intel, and then XYLD and Maine also saw some green for the week, but it looks like there's more red than anything, and I'm actually gonna organize it like this. So Johnson & Johnson didn't have the best week, down over 2%, AbbVie right behind them, Lowe's, Lockheed Martin, Coca-Cola, WP Carey, a lot more red than green, so I guess that explains why we took that L this week. It's all good though, guys. Next week is another week, and while these stocks are not performing that well, it's making them even cheaper to buy so we can buy that cash flow, buy that dividend income for less money invested, and that's really what we're after. Anyway, guys, now that you know how to beat the market, check out this next video right over here to find out how you can earn an extra $100 every single month by investing in dividend stocks. In this one, I'll show you how I've been able to do it just in the last year and a half, and how you can as well, probably in less time, to be honest with you. So click on this video right over here, and I'll see you in the next one.